Retiring well, what we've put together just for you, and we hope you sit back, enjoy, take some notes, and at the end, always give us a call if you have questions. Starting off the show, we're going to be talking about how to reduce your tax bill, something most people strive for all the time, some ways to look at that, not only today, but down the road. Then getting into what do you need to know about the Secure Act 2.0? How does it change what you're doing? How is there some maybe potential changes coming down the road? And what should you know about with that? Then saving for retirement with limited funds. We talk about all the time, what do you need to live in retirement? So it's looking at some scenarios where maybe your income is lower and you're looking to try to sneak in some savings there. And wrapping up the show, 8 habits of highly successful retirees. Looking at some of these things that people are doing that have had successful retirements and the items and stuff that they do to be able to do that. All of this and much, much more coming up right here, right now on Retiring Well.
Retiring Well, brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well, plan to retire well.
Something that gets all of our attention and has our ears perk up. How do we reduce our tax bill? You know, having more money in your pocket versus Uncle Sam's is something that a lot of folks strive for. We all believe in paying our fair share of taxes to provide the necessary things, but we don't want to pay more than that. And again, we want to have that benefit of, again, keeping as most in our pockets as possible. So I want to talk about 2 different scenarios with this sort of thing. Reducing your tax bill now, today, and then in a little bit I'm going to talk about reducing your tax bill later. So let's first start off with how to reduce or ways to reduce your tax bill now. Now before I get into anything here, remember that there's going to be certain income qualifications, phase out periods, and different rules that are going to apply to your individual scenarios. So it's important when we're talking about this, I'm speaking in a little bit generalities. For your individual situation, it's important to talk to a tax professional before taking any actions because everybody's going to be a little bit different depending upon incomes and circumstances, filing status, and all that sort of stuff. The first thing, so reducing your tax bill today. Simple way to do it, IRA contributions. For those of you that are making contributions to the IRA, those are things you can deduct off of your taxes and help lower your tax bill right now in this tax year. In the year 2023, we were fortunate to have a $6,500 individual contribution maximum for anyone that is 50 years and younger. If you're over 50, you get a catch-up provision, you get an extra $1,000 to $7,500 for that per person. In the year 2024, they're bumping that up a little bit, as they often do. So it's $7,000 for a younger than 50 individual and $8,000 for somebody older than 50. So again, taking advantage of that, if you're a married couple, you get to double that, each of you. That's an individual contribution limit. So a great way to kind of, what it does is effectively it lowers your taxable income, therefore reducing your tax bill because you don't have as much taxable income. Keep in mind though, you will eventually have to pay taxes on this money when you take it out down the road. You can also increase your 401k contribution percentage. If you're fortunate enough to work with an employer that offers a 401k plan, 403b, 457, some sort of a retirement plan, increase your contribution percentage. There's maximums such that play a role pre-50, after 50, similar to IRAs. Now, they're more generous limits, so you have a little bit higher limits with those contributions. But again, similar concept, by increasing those contribution limits, you're giving yourself a bigger savings base, but you're also reducing your taxable income. Take advantage of those catch-up contribution provisions. If you're 50 and older, you get to add a little bit more to those savings. As I mentioned earlier, an extra $1,000 per individual with the IRAs, and it's considerably more with a 401k or retirement plan as such. So again, take advantage of that if you're able to. Pack a little bit more away in those later years. The other thing that people often forget about is maybe you're a married couple and one spouse works and the other doesn't. Maybe they're already retired. Maybe they have stayed at home. Whatever the reason is, you're allowed to make a contribution for each of you. Even though the one person doesn't have earned income or wages, as long as one does, it would qualify you for IRA contributions. So you get to maximize that benefit. Let's talk about now ways to reduce your tax bill later. So this isn't doing any favors for you today, it's looking at how do I reduce it later. Simply making, instead of traditional IRA contributions, make Roth IRA contributions. You pay the tax today, tax-free distributions later on. Again, different qualifications and limits and phase-outs again, so make note of that. Speak to a tax professional before it determines your exact availability and also benefit to you. The other thing too is some employers offer a 401k Roth version. So again, it might be able to contribute more, you might be able to do it right through your employer plan. Check and see if that's available for you. Not all plans do, but they're getting more common. And the final thing that can change your tax situations later is an IRA Roth conversion. Taking pre-tax money you've already set aside, paying the tax now, and converting it to a Roth IRA. Can be beneficial down the road if you're in a different tax brackets, if tax brackets happen to change or increase or any of the likes. Hopefully you found that information valuable. Taxes are always something that seems like we're considering and challenging ourselves with. As you head into retirement, it doesn't go away and it's still something to keep a very close eye on.
As you are planning for retirement, where's your journey taking you? Do you know where you are going? How are you going to get there? And what's the best route to take? Do you have a personal retirement roadmap? At Centennial Wealth Advisory, we specialize in retirement planning, and we have designed a complimentary retirement roadmap video series that can be customized based on your personal circumstance and preferences. There is no cost and no obligation. Simply go to cen-wealth.com/roadmap and provide us with some basic information that will guide you to your on-demand, customized retirement roadmap video. Planning is the first step to succeeding. Plan to retire well.
The biggest concerns that clients have when they come to see us is usually the fear of the unknown. When they're heading into retirement, there is so many uncertainties that they're going to face, not only financially, but with time, with insurances, with taxes.
You figure you've got one chance to do it and you better do it right.
With that fear of unknown, they're looking for somebody to walk alongside them in this journey and to guide them along the way.
Retirement's like 20 to 30 years of unemployment, so you need to have a plan in place to generate that income.
We can help eliminate some of those unknowns and give them the confidence that they're going to be able to succeed in the goals they want to do in retirement.
We want you to have your finances in order so that that's more of an afterthought, more of something that you say, well, that's what our team at Centennial Wealth Advisory is there to take care of.
Too often, our industry focuses on the tools that are available in mutual funds and stocks and bonds, and oftentimes the industry wants to start with a product. We believe here that you should focus on the individual's goals first. What do you want to do in retirement? What does that look like to you? Then what strategies do we need to implement to make those goals become a reality?
So often we find that our clients love spending time with their family, with their grandchildren. Here in northern Michigan, people love to be outside and enjoy kayaking or biking or hiking in the warmer months, sometimes in the winter months as well, out snowshoeing. Our hope at Centennial Wealth Advisory is to help you open up those opportunities to go and enjoy your retirement.
As a financial advisor, it's not just my job to manage just your money. It's my job to understand who you are as a person, your personal relationships, your aspirations and goals, and so I can help create a plan that ties your financial future with your personal future and all those goals.
You want to retire, you get one opportunity to retire, and you want to do it right the first time. Our role here at Centennial Wealth Advisory is to help walk you through that entire process and ultimately help you plan to retire well.
Five things you need to know about the Secure Act 2.0. First up, What is it, right? Well, according to a recent survey by Newsweek that surveyed 2,000 adults, 41% of those adults paused their retirement contributions in 2022. And 41% of those people actually stopped contributing to their retirement accounts altogether, okay? So, it goes to show you that, saving for retirement has kind of taken a back seat recently. And so the Secure Act 2.0 is building on the Secure Act of 2019, which was setting every community up for Retirement Act. Okay, that's what it was called. And so this 2.0 builds on that and adds a couple different things to it to get people thinking about and more prepared for retirement. So the first addition is the automatic enrollment feature. Okay, so this is applicable to 401ks, and it's forcing employers to automatically enroll their employees in their 401k plans. Newsweek also did a study where they found that if people are automatically enrolled into their 401k plans, that doubles the contributions to retirement savings, okay? So it actually does work, okay? Now you can, if you don't want to contribute to those 401k plans, you can opt out of that automatic feature. But it's a great way to get started and get people involved in investing and planning for their future. Number 3 is the Savers Credit will become the Savers Match in 2027. So what is this? Well, savers, they historically got a credit or a tax deduction. Well, come 2027, it's no longer a credit, okay? It's going to be a savers match. And it's matched up to 50% of your contributions, but it is capped, okay? So you're not going to be able to get all 50%. So that cap is going to be $2,000 for an individual or $4,000 for a married couple. Now that doesn't start till 2027, and so that savers match, whether it's $2,000 or $4,000 for a married household, that money, instead of a tax credit, is going to be directly deposited into whatever savings vehicle that you have, okay, whether it's a 401k or an IRA. So that's great, okay? It increases the amount of money that people are stashing away for retirement. Number 4, your catch-up contributions are going to increase. Okay, so right now for a 401k in 2023, if you're age 50 or older, you got a catch-up contribution of $7,500. Well, come 2025, that catch-up contribution goes up to $10,000 at that point. So again, as you get closer to retirement, okay, when retirement's right around the corner, when you want to be doing the most savings, this act is giving you the benefit to be able to get those catch-up contributions and isn't increasing it that much more so that you're ready when you actually pull the trigger for retirement. And then finally, number 5, the last benefit here for the Secure Act 2.0 is that it increases the age for RMDs. So RMDs, what does that stand for? It's called Required Minimum Distributions. So prior to the Secure Act of 2019, the RMD age was 70 and a half. Then the Secure Act of 2019 came along, they increased the RMD age to 72, and then the Secure Act increases it again up to 73, and then by the year 2033, it'll go up to 75. So those required minimum distributions, that's where the IRS says, hey, you've been paying into these pre-tax accounts, we now want you to take the money out regardless of if you need it or not so that they can get their tax revenue, right? So by doing this, by increasing the RMD age, it allows retirees that much more time to plan for these distributions, plan for how the most tax efficient way to go about taking these distributions later in life. So a lot to go over there in the Secure Act 2.0. If you have any questions on how to maximize the different legislations that are put into place, maximize maximize the different tax strategies that could really implement or really help your retirement, please reach out to the number on the screen. We love going over all these little details and helping you plan to retire well.
If you like watching Retiring Well, make sure to go to youtube.com/retiringwell and click the subscribe button to never miss any of our TV shows and other informative videos.
Your grandchildren are precious to you. They are your life. This is your time to have that special relationship. Taking care of yourself is taking care of them. Centennial Wealth Advisory is offering a free, no-obligation retirement review to make sure you don't run out of money during your retirement. Centennial Wealth Advisory. Your best is yet to come.
Let's talk a little bit about saving money when maybe you don't have a whole lot of extra money sitting in your savings. And as you've probably already heard, delaying savings for retirement can be detrimental. So you want to start early and do as best as you can to start building that retirement portfolio at an early age. So let's walk through 8 helpful tips for you to consider. The first, pay yourself first. Even if it's a small amount, consider the long-term impact of saving for your retirement. So again, when you get that paycheck, go ahead and assume, okay, I've got to set some money aside for me for the long run and build up that long-term savings. Second idea is to automate the process. So your employer may offer some type of retirement savings plan. If you don't have that, such as a 401k or simple IRA or anything like that through your employer, then you can always set one up on your own. You can open a traditional IRA or potentially a Roth IRA and have a certain dollar amount withdrawn from your bank account in those examples, and have it say pick the first of the month or whatever date it is, and have that start getting invested. Third option, get a company match. Some employers may offer some type of dollar for dollar match up to a certain amount. So as an example, let's just say if you contribute $1,000 and your employer offers a match up to that $1,000, now you have $2,000 in your retirement account. So that is quite the return on investment if I look at that and say you put $1,000 in and now you have $2,000 just based on the contributions and that employer match. Definitely take advantage of that. Fourth, analyze your budget. A lot of times people aren't really sure where their money's going. You need to look at maybe your credit card statement every month and sort of see, well, wait, where did that money go? And you start to see some of the holes in your plan. Just as an example, let's assume you're going to the coffee shop and getting a $5 coffee versus maybe making it at home for less than 50 cents. Well, if instead you just took that $5 each week and found, well, there's $20 a month that could be going towards your long-term retirement savings versus coffee. So that's a basic example to consider. Number 5, start saving something. It's valuable to learn early on to be a saver, even if it's $5 per week, as we were talking about, and then learn the benefits of compounding interest. So if you put that $20 a month aside and after the course of the year, now you've got $240 that you've contributed, but then if you're earning interest on that money as it goes forward, that compounding effect can be so vital as you build a retirement savings. Another idea is to increase your income. If you get a pay raise, then what about setting aside those additional funds into your retirement? So if you get that little bump up in pay, even though I know today's world, a lot has to do with inflation and the challenges that everyone's facing there, but if possible, find a way to tuck a little extra aside. 7, leverage windfalls. So maybe you've received some type of inheritance, or it's pretty common people will find, oh, we've got a little bit of a tax refund coming in the spring. Well, instead of spending those additional funds, what about finding a way to set that aside for your retirement versus spending all of that money that you have right then? Lastly, learn how to invest. There are plenty of materials available to you to start educating yourself on retirement. Here's our shameless plug here. You can go to youtube.com/retiringwell. We have a multitude of videos, and you can click there and subscribe to our YouTube channel. You can go to our website, cen-wealth.com/vlogs/ which has a video log of all of these different videos, typically in 3, 4, 5-minute clips that'll specifically break down for you different areas of retirement planning. Earlier I mentioned the idea of, well, should I use a traditional IRA or a Roth IRA? That comes down to different tax implications depending on which one you use. And so again, we offer you those resources, or you're always welcome to give us a call here at Centennial Wealth Advisory. We're happy to sit down with you and have a conversation.
Remember when life was simpler? When things didn't move quite so fast, and the world didn't seem so complex? Remember that? We do. And as the world around us has continued to speed up, becoming more complicated and still a bit uncertain, we have managed to keep things simple, providing sound, easy-to-understand financial advice and customized roadmaps for the road ahead, from tax reduction strategies, investment advice, and guaranteed retirement income you cannot outlive, backed by the claims-paying ability of insurance companies. We can be your single point of contact, a single call, a voice you recognize well, and a partner who can be by your side for the entire journey. We can't stop the world around us, but we can help ensure you're prepared for what's to come. To schedule a no-obligation meeting, simply contact us today.
One of the draws for me to transition from teaching to this job was that one of the platforms we have is a weekly TV show. And every single week, we get to get in front of a lot of people and inform them about what's out there, what markets do, what products are available, what services we offer. And so it's teaching, and we're constantly teaching, and it's no cost. And so I love that piece of it, is that what we're doing outside of our daily work is that we're also continually trying to add value to, the people of Northern Michigan through our TV show. And there was a conference that I went to. It was in Hawaii. It was awesome. AE put it on, and we went to a sunrise service put on by some local Hawaiians. And they said one of their daily activities is to learn something new and give it away. That was a part of their culture. And when I heard that, I thought, that is so cool. And a lot of times that's what we get to do. We get to learn something new, and then we get to give it away for free. I think it's an awesome, transition from teaching to teaching, just in different platforms.
Living life isn't always easy. It puts up challenges and obstacles you'll have to overcome. There are responsibilities. You put in effort to provide and take care of your family, to save and invest, to balance work and life. Planning is the first step to succeeding. Plan to retire well.
As you are planning for retirement, where's your journey taking you? Do you know where you are going? How are you going to get there? And what's the best route to take? Do you have a personal retirement roadmap? At Centennial Wealth Advisory, we specialize in retirement planning, and we have designed a complimentary retirement roadmap video series that can be customized based on your personal circumstance and preferences. There is no cost and no obligation. Simply go to cen-wealth.com/roadmap and provide us with some basic information that will guide you to your on-demand, customized retirement roadmap video. Planning is the first step to succeeding. Plan to retire well.
Hey, welcome to this segment on 8 habits of highly effective retirees. Number 1, urgency. Always act like time is of the essence. I always say, eat dessert first, life's uncertain. But seriously, in the United States, the median age of death is 80. So as we keep that in perspective, as we're making these decisions in retirement, valuing time and prioritizing it is important. The next thing, be willing to take chances. Coach Brooks from the movie The Miracle, he said, great moments are born out of great opportunities. And retiring is a great opportunity, but it's going to involve taking some chances, taking some risk, trying something new. And to get that great moment, it's going to involve some of those chances. So, retire fearlessly. The third thing that you should do, maintain a healthy lifestyle. If you haven't, take an assessment of your health, not only your physical health, but your mental health. See where you're at. If you need help, you're not alone. Go get the help. Having an active and fulfilling retirement is making sure that we can maintain healthy bodies, healthy minds, healthy spirits. Number 4, it's better to retire with a purpose. Some of the best and happiest retirees have found a mission other than themselves. They volunteer, they go to school, they go to church, they find a need and fill a need. Number 5, retire based on your savings, not your age. This is a fun one. You basically take what your income is, contractual lifetime income is, what you want to spend, and see what the difference is. If there's a gap, have you saved enough money to fill that income gap? If you have, who cares your age? It's time to retire. Hey, number 6, make a decision. I once heard a friend of mine say, more is lost with indecision than making a bad decision. And there's been times in life where I have questioned, why would he say such a thing? And then you think about, hey, it's time. You are retired. Time is of the essence. In making those decisions and learning from those decisions, refining that process is how you can have a great habit for being an effective retiree. Number 7, perform those vital tasks. As humans, we're on this earth to help other people. And so making sure that you're making the world a better place and leaving your legacy through volunteering or for helping, taking that idea that you've had and sharing it with the world, finding that person that's down and out and you're able to help them. Those vital tasks are so important to keep in mind. And finally, foster those significant connections in life. We're built to be in community. So whether it's joining a small group or joining a different organization, those effective retirees have community. So go find one. Thanks for joining us. I hope this added value to your life.